Tax season changes every year. And in 2025, there are new rules, new limits, and new opportunities that could save or cost you thousands. If you live in Canada, these are the updates you need to know before you file. Let's start with income tax brackets. For 2025, all federal tax brackets have been indexed to inflation. That means the limits went up slightly, so you can earn a bit more before moving into the next bracket. It's a small change, but it keeps more of your income at lower tax rates. Here's what that looks like. The first $48,000 of income is still taxed at 15%. The next range, up to roughly $97,000, is taxed at 20.5%. Then it goes up to 26%, 29%, and finally 33% for very high incomes. Each bracket now starts a few thousand higher than it did last year. That helps offset the effects of inflation. Next, let's talk about contribution limits. The RRSP limit for 2025 is now $29,170. If you earn more than $162,000, that's the maximum you can contribute. If you earn less, your limit is still 18% of your income. So check your CRA My account to see your exact number before contributing. The TFSA limit has also increased. For 2025, you can now contribute $7,000. That means if you've never contributed before, your total lifetime limit since 2009 is now over $95,000. That's a major opportunity to grow tax-free investments. Now for the FHSA, the First Home Savings Account. This program is still new, but the rules are clearer now. The annual limit stays at $8,000, with a lifetime limit of $40,000. But now, some banks are offering bonus incentives or matching contributions. If you haven't opened one yet, this is the year to start. Another big change for 2025 involves carbon tax rebates. They've increased again this year. Families and individuals will see larger quarterly payments through the Climate Action Incentive. The amounts depend on your province, but most households will notice a few $100s more across the year. Next, a quick update on employment and small business taxes. The basic personal amount for 2025 is around $15,000. That's income you don't pay any federal tax on. CPP and A premiums have both gone up slightly. It's only a few dollars more per paycheck, but it adds up over the year. If you're self-employed, remember you pay both halves of CPP, so plan for that in your budgeting. For small business owners, the federal small business tax rate stays at 9%. But the limit for qualifying income remains at $500,000. If you operate a corporation, that rate continues to be one of the lowest in the G7. Let's also look at some new credits. The multi-generational home renovation tax credit is now in full effect. It lets you claim up to $50,000 in eligible renovation costs if you're adding a secondary suite for a family member. That credit can be worth up to $7,500 back. There's also the new electric vehicle rebate expansion. More models now qualify under the federal incentive program. If you're planning to buy an EV this year, double-check the government list. You might qualify for up to $5,000 back. Now let's tie this together with an example. Imagine you're earning $85,000 a year. You contribute $6,000 to your RRSP. That reduces your taxable income to $79,000. You also contribute $5,000 to your FHSA, giving you another tax deduction. Between both accounts and the new bracket adjustments, you could save over $2,000 in taxes. The bottom line is this. Tax changes happen every year, but 2025 brings more opportunity than risk if you plan ahead. Know your new limits. Take advantage of updated credits. And always check your CRA account for personalized contribution room. A few smart moves now can mean thousands saved next tax season. So don't wait. Plan your 2025 taxes today, while there's still time to make changes. For more tips, watch my video on how to pay less tax before April 30th. It'll show you exactly how to turn these new rules into real savings.